Hey everyone, welcome back to another earnings live stream. Boy, it's been a hot minute since we've done one of these. Today, we got some pretty hot ones on deck though. We've got about 30 seconds to the closing bell. We're going to get Google at 4:05, Microsoft 4:05. It's about 5 minutes into this video in case you're watching replay. We're also going to be getting Visa. Visa is going to be a really big look into that consumer spending. Google, obviously, we want to see that YouTube ad revenues are going to be going back up. What's going to happen? But not only that, what are we seeing in the advertising sector? Going to be a big deal. We've got Enphase. Any pain yet from those residential customers? Spotify, Texas Instruments, Mattel. We've got a lot of earnings coming up, a lot of them 5 minutes after the bell. Let's get the bell right now really quick.
A Republican win. Okay, and possibly, but Halliburton's up 41% quarter to date. Thanks, Quincy. The major averages close up 3 days in a row. Tomorrow, Nathan Hochman, the California tax lawyer running as Republican for California AG.
All right, not the same. I have to say the Fox closing bell is just not the same as the CNBC one, But boy, oh boy, we have one heck of a day today. A little bit of a rally back to sort of that cyclical, that growth hopium again. Usually what I like to do to see kind of where that growth hopium is I like to look at AMC and I like to look at APE. Mostly because I believe that these are good tickers to sort of tell when's retail dumping in. When are we getting sort of that hope that, oh, maybe this is the bottom. Maybe this is the time to buy. And so obviously when you see names like Opendoor, Affirm, Carvana, Coinbase up 13 to 17%, Revlon, company basically going bankrupt here. And it's not going to be anything like the Hertz scenario. When I say basically, they've already filed their bankruptcy petition. It's going to be nothing like the Hertz bankruptcy. A lot of folks have hope that Revlon's going to end up like Hertz. I personally don't think so at all. Obviously, no guarantees. But hey, look, you even got financials like SoFi up 9.4%, Roblox up 9%, Matterport sitting at $3.60. Really very little on the down today. Just Amazon down about $1.30. That is 1.3%. So let's take a preview as to some of the things we've got on deck for earnings here. Very excited. We've got 10-year treasury yields coming down, still in a painful spot though, over 4%. Honestly, in my opinion, anything over 2.75 is sustained damage to the real estate market, which we know is great for House Hack because we're creating a company to go buy real estate towards the bottom of the market, right? Which isn't anytime soon. It's probably in about 3 to 4 quarters. It could be even longer though. Patience is going to be key. And if you're an accredited investor, we'd love to have you. Just go to househack.com and you could learn how to invest. Non-accredited, probably somewhere in January. But what we got here is the 10-year actually coming down very nicely today. About, almost 15 basis points here. This is phenomenal. 4.085. Very, very good. We need to really see yields peak for people to come off the sidelines with their cash. Now, unfortunately, earnings are going to be a little bit of a mixed bag in terms of good and bad. The reason for that is if we have really strong earnings, it's just going to likely send a message to the Federal Reserve that, look, if people are still spending on at Mattel, if companies are still hiring, like this morning, we saw that Indeed had more job openings than previously, and it makes us wonder, like, is what the Fed is doing working, or are markets just laughing at the Fed? Obviously, that would be the terrible case scenario that markets don't believe anything the Fed is doing. However, that is a possible risk, and that is likely to just infuriate the Fed. Oh, Google just came out. Google coming out with a revenue ex-TAC. I don't know what TAC is, but a slight miss it looks like here. YouTube ad revenue misses as well. 7.07 billion on YouTube ad revs. The expectation was 7.46. Google down now about 4%. Looks like the EPS came in at $1.06 versus $1.25 expected. Revenues of $69 billion versus $70.5 billion. So we get about $1 billion miss there. Looks like YouTube coming in about $500 million, closer to about 0.4, so 400 million light. Hey, but then again, 400 million is no rounding error here. Boy, oh boy, those are some big numbers. So Google coming in a couple minutes ahead, which is fine with me. It spreads these out a little bit more. So advertising revenue coming in at 54.4. Acquisition costs, we get about 11.8 bills. So I'm curious exactly what they acquired. We'll probably be able to see a little bit of that in some of the reports here. Google actual revenue, again, 69.1. Advertising revenue year over year, we have 54.48 divided by 53.13. That's about only 2.5% growth on advertising revenue. Google Cloud revenue coming in at a growth rate of, let's see, 6.87 divided by 6.675. We're sitting at only about 1.7. So we've got a revenue miss on Google. We got 2.5% advertising growth. We've got a Google Cloud growth of only about 1.7%. These are pretty nominal numbers here in terms of growth. Not quite yet into that earnings recession territory, but definitely some pain here. Waiting now also, okay, Microsoft out now. Microsoft comes in with a Q1 revenue beat. 50.12 billion versus 49.56. EPS 235 versus 229. Microsoft actually down 2% after earnings. Commercial cloud revenue coming in at 25.7 versus 25.66. So Microsoft having those slight little beats here, but not really massively impressive, with the exception of the fact that if you just look at cloud is up 24%. LinkedIn, sort of these individual segments, up 17% at LinkedIn, which makes you wonder, like, are those job postings? Are those people looking for a job? What are we seeing at LinkedIn? Can we get any kind of insights from those earnings calls? Remember, earnings calls are usually going to be about an hour after we get some of those initial numbers. EPS again, well, I don't think I said it yet. For Microsoft, $2.35 with the expectation of $2.30. Revenue coming in at 50.12 billion versus 49.61. So slight miss at Google, slight beat at Microsoft. And Google talking about sharpening their focus and a clear set of priorities, healthy fundamental growth in search, but again, not really seeing massive growth there in advertising. So clearly not the biggest move here. Okay, wow, Enphase gross margin kills it. Enphase is a beat. Oh man, it's so good. It's so good. $1.25 on adjusted EPS. The estimate was only $1.10. Really, really good. Guidance. They're raising guidance. Holy crap. No pain at all yet in the housing sector for Enphase. 680 million to 720 mil estimate. That's a 700 mil estimate. And the expectation was 664. That's at least, what do we got there? That's about a 5.5% beat right there. It wouldn't surprise me to see this stock move substantially here. Enphase sees gross margin probably somewhere at a midpoint of 41.5. The estimate was 40.8. That's a beat. Gross margin, adjusted gross margin coming in at 42.9. The estimate was 40.8. Big beats on Enphase all across the board. It's not a surprise that Enphase is going to probably be one of those last stocks to actually have pain. It's up 7.5% right now in after hours, mostly because you really need to see the housing market soften. And year over year, you have not actually seen the housing market soften yet. Household wealth is still substantially up. So good job on Enphase. It's actually been selling down a little bit recently, coming off that 300 level down to about 250s. Now in after hours, going right back to about the 280s here. Waiting for Chipotle, Spotify, active users actually beat 479 million versus 470.5. I'm impressed. Total monthly active users are actually up 20%. Premium revenue is up 22%. They did see some margin pressures. However, their user forecast did beat. Premium subscribers rose 13%. And these are not bad earnings. Premium subscribers at 202 million. That's a slight miss. They were expecting 102.8. Quarter three ad-supported revenue up 19%. These are actually some very good numbers here from Spotify. Not bad. And the stock in after hours is actually falling 7%. And that's because of what they see as, I can't see why. The monthly active users beat, the guidance is up, revenue's up 22%. Sure, some margin pressure. So maybe this was like on an EPS or bottom line level. But the numbers actually look really good at a glance here. Let me see if I can get an EPS. EPS, active users beat by about 6 million. Premium users beat, again, 195 million premium users versus 194.2 expected. 456 million active users versus 450.7. That's actually interesting. I want to divide that number. I just want to see here what we got if we divide that in terms of how many users we have and how many of those are premium users, like what percentage, right? So 456, 195. So you get about, wow, 42.7% of folks are premium users. That's actually really impressive. Revenue coming in at 3.2 billion euro, just shy of expectations. The loss per share was 99 cents, and the expectation was 82 cents. That's the only ouchie I could see here is we have a miss on the bottom line due to some margin pressures. We have total premium subscribers, 202 million. Total monthly active users, 479. Fine. Premium subscribers, fine. Too early to provide any guidance with respect to 2023, but do expect profitability rates to improve. Okay, so no guidance, EPS miss here at Spotify, making the markets a little bit nervous here. Stock down now about 8%. It was up about 2.5% on the day. Visa comes in with a beat, EPS at 193 versus the expectation of 187. Folks, if I were the Fed, I'd be pissed, okay? These earnings are freaking great. Adjusted EPS 193 versus 186. I mean, Enphase is killing it. Google barely missed. Microsoft just beat. I mean, and the expectations have been kind of not that bad, honestly. I mean, they're good. EPS over at Visa at 186 versus 165 for the fourth quarter. That's not the adjusted, so that's GAAP. Then we've got payment volume. Oh, payment volume slips 2.93 trillion versus the estimate of 3.01. So payment volume down at Visa, but EPS actually beats. Stock flat after hours. Visa authorized a new $12 billion share buyback program. Come on, man. Buybacks are not what the Fed wants to hear about right now, but that's all right. I mean, honestly, like now's the time to do buybacks. Everyone's so discounted. Visa year to date, only down about 12%, though. Not bad. 1 year, it's down about 16%. 5 years, it's up 77%. We have, let's see, transactions growth remains strong while cross-border volume continued to recover from COVID. Its quarterly dividend has been boosted to 45 cents from 37.5. The estimate was 42.5. So a little bit of a beat there on the dividend expectations and less transactions than expected. Mattel posts flat sales in Q3 and profit declines. Gross margin is actually not that bad. Adjusted EPS comes in at 82 cents versus the expectation of 73 cents. So I wonder where the miss was. Gross margin 48.3% versus 47.5%. Honestly, for a toy maker, 48.3% gross margin, that's freaking amazing. I mean, good for them. Adjusted EBITDA, slight miss here for the fiscal year, coming in at about 1.075 at the midpoint. We were expecting somewhere around 1.115. So flat sales in Q3 at Mattel. Mattel reporting 82 cents in EPS, though. It's sort of that fiscal year that kind of hit a little bit to the downside because EPS in the quarter did fine. Sales did miss. Sales coming in at $1.76 billion. Could you imagine $1.76 billion of sales selling toys? It's incredible. The estimate was 1.79. Mattel results kind of coming up mixed here. Interesting. Let's go ahead and see just how the stock is performing right now. After hours, it's actually showing up as flat. Mattel year to date only down about 9.06%. Okay, so Spotify again beating revenue forecast, but ad growth slows, so hitting that bottom line a little bit. Visa seeing those transactions come down, but profits still up. Okay, Chipotle comes in with an operating margin that's slightly missed, 15.1% versus the 15.4% expected. Comp sales up 7.6%. Honestly, that is a negative real growth if you take out inflation. Digital sales up 37.2%. That's not a surprise. More people are just downloading the app. Revenue coming in at $2.2 billion versus $2.24 expected. Slight miss. EPS coming in at 9.51. That's actually a beat compared to the 9.23 expected. So expecting to get to 235 to 285 total new restaurant openings, 255 to 285. Oh, okay. Let's see. Chipotle Mexican. How many restaurants do they have? Let's see here. How many restaurants does Chipotle have? Let's just take a look here. So there are 449 stores. There's no way you're going to grow by that many. I'm a little confused as to what that line there is. You wouldn't go from 449 to growing another 255, would you, for 2023? I don't know. We'll figure that one out in detail. But that's something to take a look at here. Q4 comparable restaurant sales growth mid to high single digits, right along with inflation. I mean, really, so they're keeping up with inflation. So let's see here. Let's see if we can get Texas Instruments out. Let's see what they have. Texas Instruments. Okay, so Texas Instruments comes in with revenue, Q4 guide that actually misses pretty decently, expecting to be at 4.93, coming in at 4.6 as a forecast. So TXN could see a little bit of a hit there. Yeah, TXN dropping about 5% in the after hours right now. Yeah, Texas Instruments dropping about 4%. Yeah, okay, well, it's now down about 5%. Q4 revenue, that's the miss here. CapEx spending up to 790 million versus 741. So a little bit more CapEx spending to get less revenue. So more spending to get less revenue. Q3 revenue actually beat 5.24 bill. It's just their forecast coming in a little weak. Estimate there was for 5.14. Q4 EPS expected to be about a midpoint of what is that, about 198, and they were expecting about 223, so about a 10% miss there off the top of my head. And let's see, experience weakness in personal electronics. I mean, that's not like a terrible surprise. How many? Okay, Car for Coin says 3,047 locations for Chipotle. That sounds more correct. The quick little search I was doing didn't seem right. So it looks like that's the growth. So we are expecting about that 250 to 280 new restaurants then, if that's the case. Thank you, Car for Coin, for fact checking that. Appreciate it. Okay, that makes a lot more sense. So that puts them at about 7% restaurant growth. Shows though they're still investing, still expanding. Look, I don't see recession in any of these earnings here right now. Like, none of this is really scary here. I mean, a little bit of margin pressures at companies like Spotify, but this is not bad. Alphabet working to realign resources. Honestly, I mean, that just sounds like it's layoff time. I don't know. It's just not so great. Google down about 5.8%. I mean, that's actually a pretty decent hit. Microsoft, on the other hand, doing substantially better with their earnings, but still actually down about 2%. Let's see how some of these other stocks are moving along with them. Apple moving in after hours down about 1% after moving up about 2% today. And Tesla up about 5.29% on the day, down about 1.3% in the after hours here. Microsoft complaining about that strong dollar throttling their growth a little bit. Microsoft seeing cloud really driving the first quarter results here. And but still missing projections. That's incredible because they did have some substantial growth there. Still missing projections. Enphase just an absolute killer here. Still, honestly, just crushing it. But I don't know what happened here. It was up 7% in after hours. Now it's only up about 1.66%. So I'm not sure if we got any kind of red flag there going forward, but I'm not sure why all of a sudden it would fall, because those earnings were really, really good. So you know what we're going to do? Let's go ahead and go to investor relations for Enphase. This is something that we usually do daily with course members, where what we'll do is we'll go to the investor relations websites and I'll break these down and we'll do some commentary on them, which obviously in earnings seasons, in earnings season, there is no shortage of these things to look at. So if you ever want more of this kind of content, or we could do earnings together, make sure to join those programs on Building Your Wealth, link down below. All right, Enphase investor relations website is actually freezing a little bit, but I think we got it here. Okay, Q3 financial results. I'm optimistic here to see some phenomenal numbers from Enphase, but I want to see, are there any red flags as to why all of a sudden we would see this kind of rotation down here in the stock after hours? So here we go. Why are we seeing that fall? Let's look at Enphase. So Enphase, global tech leader, world supplier of microinverters. By the way, if you want to know where margin is, folks, it is in the microinverter business. That's where the money is. It might be not necessarily just microinverters. It could be inverters as well. But absolutely a lot of margin here compared to solar panels. It's one of the reasons that I personally prefer a company like Enphase, because you do have microinverters and battery systems that can really push and drive very, very high margins. Now, what's interesting is because Enphase is sort of on this real estate cycle, we could end up seeing stocks potentially hit this bottom, and then real estate not actually hit the bottom until a period later. So the pain for Enphase could actually have a substantial delay. Let's see if we have any red flags to that. So far, it doesn't look like it. We reported revenue 634 mil, really great. I mean, they are growing like crazy with 42.9% gross margin. Absolutely incredible. Oh my gosh, 4.3 million microinverters. This is really, really incredible. 133 megawatt hours of Enphase batteries. That's awesome. Let me see. These are usually, I think they're 15 kV Enphase systems. Let me see here. Kilowatt Enphase battery. Or is it a 5 kV? Because we could then divide this. 5. Oh, there it is. It is a 10 kilowatt hour battery. They also have a smaller one. But if I take 133.6 megawatt hours and divide that to kilowatt hours, and then I divide that, come on, megawatts, baby, megawatts. KWH. All right, this is just going to work. 1 megawatt. There we go. Get my conversion here. It's just times 1,000 basically. All right, times 133.6, and then we're going to divide this just to see how many. I want to see roughly how many systems they did. So if I divide it by 10 approximately, that's about 13,000 systems roughly. And that's assuming the 10K system. 10K kilowatt hour system would be about 13,000 homes, or I should say units. You know, some homes have 2. There we go. That's interesting. All right. So where is any potential pain? Revenue increased 20% compared to the second quarter. Dude, that is so amazing. 20% revenue increase quarter over quarter. Ah, it's so good. It's so good. They're growing like crazy. Demand was strong in our markets worldwide, particularly North America and Europe. Our revenue in Europe for the third quarter increased 70%. But that's because their revenues were lower there. But yeah, obviously you've got an energy crisis over there, so that makes sense. IQ battery shipments increased 1% compared to the second quarter. But then again, they're a little supply constrained with these shipments, so that's okay. 42% in the second quarter of IQ 8s. Let's go. Those are high margin. Great. OpEx went up a little bit due to R&D, customer service. That's fine. Totally expected. They are growing like crazy, this company. It's honestly one of my favorites. I wish I had a bigger bet on them, but I am worried about that housing slowdown. But boy, it's just not showing up yet. IQ8 microinverters, about 47% of all microinverter shipments. Good. We want to get these ultimately to 100%. And okay, they acquired a German company called GOOG Networks in Munich. Provides us the Internet of Things software solution. So basically smart home devices, probably at home to manage things like, okay, part of the Enphase app, blah, blah, blah. Fine. Business highlights. Not so worried. I want to see outlook. What do we got here? So gross margin, you know, this is the only thing I could imagine is that maybe they're expecting some kind of gross margin decline. Gap gross margin over here for gross margin, we had 42.2% in this quarter. And it looks like now they're expecting that to potentially decline. So some margin compression expected in Q4. It'd be interesting to see what their rationale is for that. Operating expenses, fine. And that's it. Okay, so no real insight in terms of why maybe we would see some kind of potential issue here. Not so worried about their capitalization. I know these people are just absolutely killing it. So I mean, look at this growth. It's just absolutely unreal. Net revenues here, $634 million versus the 530 of last quarter. Really, really incredible. And their sales and marketing didn't move at all. Oh, it's so good. Oh man, really, really great company. I mean, this is phenomenal. Now, you do have a company that is not the cheapest. If I go ahead and just pull an EPS projection here, let me see here. Enphase, I don't see why it would give up its post-market rally, honestly. So we're expecting about $4 of EPS here. This is a company trading for about 280 right now. And so if we look at 280 divided by, let's go 285 divided by 4.1 EPS for the year. Okay, so you are trading a little richly here, which, they haven't really felt the recession. You're trading for 69.5. We should just say 69. No, sorry. 69.5 times earnings. This is your PE ratio, right? We are growing at about, I'd say I'll give them about 50% easy on year over year, if not even a little bit more. But if I give them that, 69.5 divided by 50 puts them at about 1.39 peg at 50%. Not bad. It's just it's richly valued, and it really has that downside risk when real estate ever slows down. But I don't know what the red flag here was. I certainly didn't see a reason for this to give up its after hours rally. This really looks quite incredible. So no red flags that I see at all in this statement. After hours, Enphase is now down 1.25%. It totally gave up a 100. I mean, this could be market wide. Looks like NASDAQ actually rotating down here. Trying to understand what the hell is going on here, because this is actually, like, these earnings are phenomenal. I think what could be happening here is a syndrome of good news is bad news, right? Good news is bad news. It's also probably Google, quite frankly, that's dragging this sucker down. But you get good news by some of these companies, and it just makes people think, oh, the Fed's got to push more. Google's down at $98, down 6%. Holy moly, that earnings call is going to be really interesting. Let's go ahead and look at. Let's actually go to GOOG Investor Relations. It seems to be that this is actually the stock that is dragging down the NASDAQ. It's going to be dragging down the S&P 500 as well. So clearly there's some kind of pain here beyond just the numbers that we've already covered. So let me see if I can get their press release. Yeah, their 10Q is not out yet. This is pretty typical. Right when you do your first earnings, you generally don't get the SEC filing until later. That's totally okay. Let's go see if there are any hints here. So, see, I personally don't like it. I talk with course members about this on almost an every single day basis, which is where we try to really understand what companies are saying, right? And this is more than just like trying to like trade the stock over the next day. It's really to try to fundamentally understand what is the psychology that the CEOs are talking, right? And when you talk to me about sharpening your focus, it means that you're not focused now, right? It means you don't have a clear direction right now. It means you've got too much staff. It means the growth just isn't there anymore. So growth isn't there right now in ads, which makes sense. And you have employees positioned for growth. So no wonder you really need to sharpen your focus, because you kind of lost it right now. That doesn't make it a bad service. It just means it's a company that is going to trade a lower valuation multiple, right? So it's going to get some valuation compression if you don't see that growth. So seeing on constant currency up about 11% in rev, fine. On constant currency, that's when you take out FX adjustments, barely greater than inflation here. Let's net income here. Net income still actually nicely rotating. Wait. Always do this, okay? They trick me doing this. Highlight when you're looking at these reports. Highlight what year you're actually looking at. All right. So look at this, folks. This is actually very interesting. Your revenues for 2021 in Q3 were 65 billion. Holy smokes, 65 billion in revenues here. But if you look at this, you actually had a net of almost $19 billion. Huge decline over here. So I'm not exactly sure what happened here to net income, but net income got absolutely destroyed, decimated. This is what an earnings recession looks like. This is quite painful right here. So, this is a decline if we just do this math here, and we'll look to see if this has to do with acquisitions or where this money went. But just briefly dividing the new number divided by the old number, 18,936, we're talking about a decline of what is that, 26.5%? 26.5% decline in net. Yikes. Let's see if we could find out in the statements what happened. So Google ads. YouTube ads actually down. New number 71. And that was supposed to be the growth driver. YouTube down about 2%. So 1.85% down for YouTube. Yoicks. Then you've got Google search is actually up 539. I like that they finally divide out YouTube, honestly. They didn't used to. Yeah, so Google search is actually up I think this is just because less people are watching YouTube, which makes sense because more people are going back to work. I mean, I still think there's a lot of value on YouTube, obviously. I'm a little biased, but whatever. So let's see here. Google Cloud. Okay, good. 6868 divided by 4990. Google Cloud seeing a nice 37% growth, but that's not where the money is. Let me see here. Google Cloud represents, in terms of revenue, I mean, as a percentage of revenue, hold on, growth, that's fine. So, I mean, 39% or 37.6% growth is fine. But as a percentage of revenue, Google Cloud only represents 7% of revenue. Most of your revenue here is coming from Google search, quite frankly. I mean, YouTube here is representative of crap. Let me make sure I'm dividing the right numbers here. Hold on. 6868 divided by 69092. Sorry. Google Cloud now representing about 9.9% of revenue. That's up from 7% for Google Cloud. YouTube ads. Oopsies. I did something wrong. Hold on, I will fix it. Oh, I think I fixed it. Okay, good. So back. So YouTube ads used to be, let's see, as a percentage of revenue, 7205 divided by revenue 65118. It used to be 11.02. Let's see here, the current. So last year was 11% of revenue. Now sitting at 92. 10.2% of rev from 11%. So you actually have a decline in how much revenue is coming from YouTube as a percentage of the entire company's revenue. So really, the YouTube growth story is suffering here. You're seeing that decline in advertising revenue at YouTube. That's quite interesting to me. I wasn't really expecting that. I certainly thought that YouTube would have been a continued growth story, but wrong. Let's see here what happened on sales and marketing. So sales and marketing, boy, I've gotten a lot of Google promotions lately for Google Cloud. 26% increase year over year. 25.6% year over year on sales and marketing. Research and dev. Ooh, that's a nice little bump there. 10,273 divided by 7694. 33.5% on R&D. Year over year. And costs. So remember, folks, again, if you want to be part of these sorts of analyses, and we go even deeper into earnings calls and everything, join the course member live streams. We do them every single day the market is open. We look at some companies. I'll take your suggestions. I'll go through recent earnings, whatever. Try to do 2 to 3 a day. 3 gets sometimes a little busy, but during earnings season, we'll probably do that. And sometimes we'll go, super deep in just one. It sort of just depends what's going on, but it's really fun. Cost of revenues. So this is really going to be your staffing. 31158 divided by 27621, sitting at about 12.8% year over year here. So it really looks like they're selling, they're really bumping their S&M, their sales and marketing, but they didn't see that kind of boost of revenue. I mean, cloud then again boosted 37%, but it's a small part of their business, and it looks to me like they're having to spend more money on sales and marketing to really push that sort of activity. So, but definitely seeing that decline in YouTube, that's going to be a pain segment there. That's going to come up a lot in the earnings call is my expectation. That slowdown in YouTube. So NASDAQ now down about 1.31%. A little bit of a breakdown here for Enphase and Google now beyond what we've had in some of these other earnings here. Going back, let's see here. Enphase, how's Enphase doing right now? Enphase back to positive, as it honestly should be. Those earnings were really good. Google inflation fears fan the advertising concerns. Fine. Chipotle rises after profit beats expectations. We saw that. We've gone through a lot of these earnings. I mean, very interesting to me, folks. I think, I'm going to go through some of the earnings calls on the others here. Check out the programs on Building Your Wealth down below. Use that Halloween coupon code. Get life insurance in as little as 5 minutes by going to metkevin.com/life and get yourself 12 free stocks with Webull by going to metkevin.com/Webull. That is this beautiful platform that I have right here, which when I type in Tesla, you could see that I have a beautiful Fibonacci curve that, again, I have to drop even lower because that's what we do, folks. We come over here, we draw a Fibonacci curve, and then every time we draw it, we have to come over here and adjust that bottom down again. Now hitting a low of 198.59 on Tesla. Look at that. Yikes. Constant rejection. Really pain here, but just recently off its floor, basically. Anyway, this is Webull. Get yourself 12 free stocks, metkevin.com/Webull. All right, folks. Thanks so much for being here. We'll see you in the future. Goodbye.